दुनिया बदल गई है as we woke up in the morning with oil hitting a 7-year high as Houthi attack on the UAE has certainly rattled the region. On top of that, keep your watch out on the bond yields. The 10-year bond yield hovering around 1.87%. It's at a 2-year high. None of this will augur well, A, for India's import bill as well as Indian currency. How is it going to impact flows as well? That and more so I'm going to be discussing with Peter. Peter, it's 8 a.m. here, so good morning. Thanks so much for joining us live. I'll begin first with your reaction as far as the crude prices go. Yes, there are geopolitical tensions at play, but even before the geopolitical tensions, we were seeing report after report suggesting that the triple-digit figure is not far.
Well, good morning. No, it's certainly not far at all, considering where we're sitting at the moment, nearly at $89 a barrel for Brent. So we've had a two-prong approach over the last matter of, say, 24 hours. We've got that the UAE with the drone attack by the Houthi rebels. There's the first part. The second part is don't take our minds off the very important pipeline running from Kirkuk to Sihan, and that was knocked out on an explosion at about the 511th kilometre of the pipeline. The pipeline stretches for about 970 k's or kilometres, and in my language, it's always referred to as the Turkey-Iraq pipeline.
So, what are you penciling in as far as oil prices go? You know, $100, $120, $147.
Yeah, well, I was there in New York when it hit 147 at the NYMEX, and I put my mind back to those early days of July 2008. So let's hope it doesn't get anywhere near that. It's $11 from 100. Does it hit there? The momentum at the moment is certainly very, very bullish since really all of December and leading to where we are now at 7-year highs. So I'm not going to say it's not going to be achievable. Many of the big bank analysts are saying that 100 is very much a target area within possibly the first quarter. So that's still 10 weeks away or 9 weeks away. So yes, I'll put my hat in the ring and say probably it's achievable. I don't know whether it will get there, but it seems to have a lot of upward momentum at the moment.
Right. Also, Peter, add to that, one is wondering what the impact could be back home here in India. The fact that, India's import dependence on crude is as high as 85%. I mean, even a $1 increase in crude means, our import bill could increase by as much as $2 billion.
Well, that's exactly right. I'm conscious of the numbers and think about what we've experienced when we were at $70 a barrel, which wasn't far away or long ago. And we're now up 30%, nearly 30% from those, from that period in the last 6 weeks. So we're nearly at 90. So it's had a very strong move to the upside. And yes, it's impacting not only Main Street of India, but Main Street of the world as far as the consumption and to the wallet and the purse as far as that, it's just very, very tough on the consumer. We've got inflation running out of control and we've got very, very high energy prices. So it's certainly not a good sign for any economy nor any of the consumers.
Right. Peter, great to chat with you and get in that quick perspective on crude prices spiraling up, because that's surely going to have an impact on India as well in the import bill. The positioning just ahead of the budget is going to get pretty crucial. It also being an election year. Remember, you've got election in just 2 months in 5 states. So the government is not even passing on the uptick in crude prices on to consumers so far.